Hello and welcome again as Stocks Advisor. Today we will talk about MicroVision Incorporated, traded at Nasdaq, ticker name MVIS. Well, MicroVision is a company that is already long-term sitting in the between the level of 10 to 20. Let's say you can see here the price is, let's say, reaching the bottom of this level and also reaching then the top of this level, sometimes piercing it. At least for the last half year this was the case, so it makes it overall, let's say statistically speaking, not non-technically of course speaking, such that if you are at the vicinity of the lower part of this level, you are okay to buy, then you can wait reaching the top. And now speaking of, let's say, more technical related stuff, what's happening here, we are already experiencing long-term linear correction that started to take place from mid of June here, and it's still ongoing. Now we are actually bouncing from the middle. Now we can magnify to see it. We are actually bouncing from the middle of it downwards, which might mean the opening of the new faster channel, declining channel. And if this would be the case, it would mean that we might, let's say, experience something like this to happen, and then really very fast breakout. So these cases usually take place if you have first very accelerative decline, then you have very fast breakout and correction upwards. So it's a very interesting chance, very good opportunity to buy, but it means that we don't buy immediately here. We just wait for the next appropriate levels to buy through. And here they are already quite close. So usually on this kind of patterns, the very strong support is the moving average 200, which is we can see here. And by the way, today and yesterday we had so-called magic cross down when moving average 20 hit from the top moving average 50. So this might also psychologically cause, and given that it's a Friday already, cause the price to decline today. But overall, anyway, we didn't reach the top of the channel, so we are going lower here. So what would be the levels to buy and to sell? As I said, the first level would be at the very first support, and here it should be being at the bottom, a little bit lower than moving average 200. This is a very strong support line where we can buy, and this one being the upper part of it. So it will be between 10.07 and actually 12.26. Quite broad, but also volatilities are quite broad for this fund. So whenever we are there, especially in the vicinity of moving average 200, it would be immediate buy call here, and we can write already our first call out. So this is the first technical pattern where the rebounds can be expected, and then at least we should return all the way to the top of the current descending channel, which would mean somewhere in the vicinity by the time of 14, making for us opportunity to make at least 15 to 20% profit from the money allocated in this position. Therefore, we can make our profit note here, 15 to 20%. Very rare. Usually, it's a very good if you can find a ticker with this profitability expected. But again, it's not immediate buy. We just need to wait a little bit here, and then we can continue. This is a very strong level because the secondary pattern, which usually we discuss, in this case is quite weak. In a sense that its chance to appear is quite weak, but still we, as we always do, want to keep some funds to buy there if this is happening. And then that level would be exactly here, formed by end of previous year and in end of January this year, which is between 7.04 and 8.38. As I said already, it's quite weak in a sense that the chance we go there is low, but we still would like to keep some funds to buy at that technical level if we are going there, because this is the way we trade. We discuss two technical levels and one risk mitigating. And why we distinguish those? Because technical level is those that could be expected. The risk mitigation is just not expected, but the level where we just keep some funds if any bad negativity comes in form on the news or sector or global market related situation, so that we can buy there without taking losses. And here, if you look at those levels, they should be quite low. Actually, one formed by also in December here with this inflection point and it would be all the way from 5, actually all down till here, till a little bit lower, 395 to 5. And as I said, it's not expected to happen. It's just money we keep to buy at those levels if any, let's say, risk mitigation, any bad negative catalyst is coming. So with this being said, these are 3 levels to buy for MicroVision. Overall, as I said, the first level is very strong, so we can expect rebounds there. And this will define our buying strategy. Since there are no extra risks involved, it's a classical buy, meaning that the money would like to play here. You can split in 5 portions, and you can buy with 1 portion for the first level. If we go to the second level, you can buy with 2 portions, and remaining 2 portions you can keep just to mitigate risks if any negative catalyst comes. Why do we do this? Because we are looking at the daily candles, as you can see, at the very principal levels. So we do not exploit here any stop loss strategy. So we're not looking at 15-minute candles. We do not want to buy time with money, which is actually the stop loss approach. But we want to buy non-linearly through the levels. So we buy money with time, meaning that we are okay to wait a little bit longer, but still we want to exit with a profit. And in the worst case scenario, with almost draw. So this is more skewed towards profit taking, but you pay with time. When you do stop loss approach, of course, it's also for profit taking, but then let's say you buy time with the money. That's why you do stop loss. So you don't want to wait, and also you don't have money to buy more to average down. So this one that we discussed here at our channel is more for those who buy with big money, or for those who use, let's say, trading as a secondary source of income. So you are not sitting at your PC during the trading session and looking at 15-minute or 1-minute candles. So if you like this approach, which I think is also very suitable for those who seek for advice in YouTube, because these are usually a category of people looking for a secondary source of income, don't forget to subscribe to our channel, follow us, press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks. With this being said, good luck with MicroVision, and see you at another episode of Stocks Advisor channel.